What's going on, everybody? It's your boy C-Zar, and we are talking about XLM Stellar Lumens today at the request of Georgie Boy. We're doing this for you, my friend. Hit the like button, subscribe if you want to see more content like this, and let's get into it because, Georgie, you're keeping me up, man. I need to go to bed. We're at 34 cents right now. We had a bit of a low, didn't we? All the way down to 26 cents, and you're up right now about 30% from that low. That's beautiful. That's nice. Good job. Looking on the week that you slipped a little bit, but it's okay. It's okay if you slip and fall. What the main point, you got to get back up, right? And I think XLM did do that. Hold on. Sorry, my daughter was just crying, but I think everything's okay. My wife's taking care of her. 34 cents right now. Looking at the weekly RSI, it would appear to me that this is the right area to bounce from, that we've got nice structure forming higher lows here, and we probably do bounce and continue to grow higher. Hold on. I'm just going to go. Okay, I'm back. But yeah, finding support here and moving up higher, it makes sense on a weekly RSI perspective to me, not just in the trend, but if you look at the weekly RSI, we're right near the 50, which it's not an area that we found support on recently, but we have found resistance here before, even just like right here in this area. We found support in this area too prior in the past, resistance. It's somewhat of a significant area for XLM to turn around on, at least on the weekly RSI perspective, and it certainly seems like it would be here. So I definitely believe that wick to the downside, as much of a slip as it was, you ate it back up immediately. I don't think it's anything to be concerned with. You still are in this bull flag, all in all. And even, you know what that's called there? They call that a partial decline. It's where you reach for your lower trend line, but you can't achieve it, right? Because there's not enough selling pressure, or there's too much buying pressure, or maybe a little bit of this, a little bit of that. But either way, it's a bullish thing. They call that a partial decline, okay? Yeah. Anyways, I was about to say there's a little theory to it. Partial declines might only happen in broadening patterns, but I think you can observe them even in slanted patterns like that. I don't think they need to be broadening, but semantics, nobody probably cares about. I'm just a nerd. From a high to a low, you ripped all the way up to your 886. This is just an insanely powerful move. I love that even though you slipped below your golden ratio, you got right back above it. You're likely going to close this week here or higher. That's very positive. I think that when it comes to moving up higher, you are going to move up to this $1.54 to $2.18 area. That is your next target zone, and I suspect you'll be there by the end of February, probably around $1.54 by the end of February, if not higher. But I think that $2.18, $2.20 area, I think that's probably going to be middle of March, second week of March or something like that, right? And the only reason for that is because this is the same prediction we've had since back here, right? As time goes on and we're moving sideways, the same targets are just going to move with us, right? It's like if back here I was calling for us to go here, but it happened here instead. I wasn't 100% wrong. I got the timing wrong, but inevitably it happened. If you bought here and it just took longer, I'm sure you'd still be just as happy with the move there as you would have been here. Of course, immediate gratification is the best, isn't it? Especially in today's day and age where we're all used to that kind of stuff, or at least, you know, maybe just people living in modern societies are. But I certainly do suspect, whether it's by the end of this month, February, or the middle of March, I certainly would expect that we are at $2.20 and definitely above $1 by the end of February, certainly at new all-time highs, breaking out, moving higher. This is I want to just say it again, this is an absolutely beautiful consolidation phase that you have going on here. With this getting to your 886 and pulling back to your golden ratio like this, and just the way this bull flag is structured, it's perfect. It literally looks perfect. I love it. I think it's amazing. From a relative low here to a relative high, you tipped your 382. It's perfect. It's so perfect. It's literally perfect. I don't remember. Did I call for 29 cents to happen? I feel like I might have. I don't remember. because that's the 382. I would have, this would have made sense to go a little bit lower. I don't want to say that, right? I mean, who cares if I'm right or wrong anyways? It doesn't matter, but you're right at your 1272. It's right below the 3. It would have made sense. If I didn't call for that, I was just actively choosing not to see that. I'm curious if anybody else is curious. Watch my last video or videos before and see if I was calling for that, because I feel like retrospectively it would make so much sense. And if I didn't call for that, I was genuinely ignoring my own analysis, because getting below the 236, almost always you go to your 382 before moving higher. And then on top of that, you had your 1272 fib extension right here. I know it looks kind of blurry, but just having that overlapping. And then on top of all that as well, whenever you see a very strong move like this, oftentimes you do find support right at the 382 and then move up. It's just all perfect. It's literally picture perfect. Okay, so let's run with this again, that you are in a picture perfect bull flag, because you are from a low to a high. This does change our targets, right? Because we put this low here before, and that measure move took us to $2.22. But the way you do a bull flag is you take it to the low of the consolidation phase itself. Now, I will say this, the same thing that I say every single time whenever we do this measure move, okay? And this is from a different target now, so it's a little bit new, it's a little bit different. It's still a little bit too high. I want to get it right on that low there. That would take us to about $1.87, just below $2. But I want to say this, I say it every time, measure moves are just ideas. They're not requirements. They're not barriers. They're not magnets. They're just ideas. You can fall short of them. You can hit them precisely. You can well exceed them. You don't have to hit them immediately. It could take you weeks to hit them, months to hit them. You know what I mean? It's just an idea. It says likely when you break out of this, you're not going to stop or consolidate for a consistent amount of time until you hit this price. But that doesn't mean you have to, right? I would say, because of how bullish this pattern is in itself and how bullish the readings are, I would expect that not only do you hit this, but you could exceed this. And that really lines up. That makes a lot of sense with our relative high to low here, 246 there, relative high to low here as well from the last cycle. $1.54 to 218. That measure move is smack dab right in the middle. My opinion would be, because of this new low, $1.54 is a bit more of a possible target than we might have acknowledged it was before. It's always been possible. We've always acknowledged it, but I've often said that I don't expect us to stop there. But what I would say is this. If we go to this target, the measure move, then this is going to be one of those instances where we do exceed the measure move, because it's very uncommon to stop in the middle of the 1414 and the 1272. Oftentimes, if you get above the 1272, at least on a closing basis, you do hit the 1414. And oftentimes with the 1414, you even go a little bit through it. What's a little bit through it? The 1272 of the greater fib from the overall high to low of this range. There's so many ways to make sense out of prices, anywhere from $1.54 to $2.46, but it's hard to guess where we're going to stop. If we get to $1.54, I think prices around $2.20 to $2.46 should be considered. Absolutely, they could. If we can't get above $1.54, and when I say get above $1.54, don't get excited just because we're at $1.60. I want to see it like break that level. Don't just peek through it. Break that level. Okay. If not, that could be where you find resistance, and that's not as exciting as 220, but you're at 34 cents now. That's not bad. And again, I very much do expect these targets to be acquired by the end of this month of February, if not sometime in the middle of March. So within the next 3 to 6 weeks is kind of my expectation. Okay, nothing's changed. Absolutely not. Nothing's changed. The only thing that happened, okay, with Stellar between this day and this day was that the price dropped. Nothing fundamental has changed in a negative way. It's the same coin it was here whenever it was on its moon mission. It's the same coin it was here. It's the same coin it is here, right? It's from a fundamental perspective, nothing's changed. It's just the price. Price worries people a lot more. What should worry you is fundamental changes. And what should ground you is the stability. And Stellar Lumens, XLM, not only does it have fundamental stability, but from a price perspective as well, it also has stability. It's been consolidating for 2 cycles in a very, very bullish triangle. It just broke out. I don't think it stops here. I think you're just getting started, and you'll know that you're on your next phase up. You'll know that you're onwards to targets that are likely going to be above $2. I'm confident that you will go above $2. Whenever you do see a price above, You get above, I'd say it's time to start getting excited when you're above 58 cents. You get above 58 cents, and within the coming weeks, 2 weeks, 3 weeks after crossing above 58 cents, you'll probably see prices above $2. And that's all I got for you. So if you like the video, hit the like button. Subscribe if you want to see more content like this. I really appreciate you all for being here. We can throw the ribbons on real quick. I know the Stellar Lumens people love the ribbons, so let's pull that up real quick. They make you feel safe. They make me feel safe, right? They're kind of nice to look at times, visually appealing, right? It's a good color scheme that they have here. I like that you dipped into it and got back out of it. This is a very positive look. What you don't want to do really is next week you don't want to get into it. The more that you flirt with this ribbon, the more likely you are to go below it. And that sets you up for targets that are below 22 cents. And you don't want to see that. It's not detrimental if you do that. It's still a higher low, but you want to move up. You don't want to move down, right? So just don't do that. 3-day time frame, perfect, right? You were bleeding into it. It makes sense that you would go. We were saying this. Maybe I didn't call for the price to go down because I remember saying that you've done this before and you didn't bleed. You didn't go lower, right? Maybe I'm thinking of a different chart actually because I didn't see the examples there. I don't know. I'm getting all confused. I'm forgetting which coin was looking like this. Anyways, it makes sense because you were hugging the ribbon. You weren't bouncing off of it, right? And it looks like you're bouncing off of here, but you were hugging it. Anytime you hug the ribbon like this, you oftentimes find support below it before you begin to expand out of it again. So positive look right now. The next goal would be to get above the yellow line here, which is at about 40 cents. So start closing above 40 cents. You have 16 hours, 20 minutes left. If it's not by the end of this 3-day period, it can be by the end of the next one or just whenever you get above that yellow line. It likely will signal that we are onwards and upwards. So it might be cause enough to get excited if we do close above 40 cents on any given day. The daily time frame is getting a fresh bearish cross right now, but I will say this, okay? The ribbon as of now has been largely disrespected. It's been very disrespected. And in moments like this, the bearish cross that you're seeing unfold, it might have less weight. In fact, this could have been your preemptive bearish cross drop, and now you're pulling back into the cross. If you pull into the cross and reject, you will likely go lower. If you pull into the cross and you get through it, and then you flip the cross back, it was a false cross, it's a positive signal, sends you higher. Getting above 40 cents, damn, I'm doing the straight arm thing right now, aren't I? Getting above 40 cents is the goal, the short-term goal. Getting above, I think it was, 57 cents, 58 cents is the midterm goal. Getting to $2 is the, I wouldn't even say long-term goal, just the goal over the next 3 to 6 weeks. So that's all I got, guys, for real this time. Hit the like button, subscribe. I appreciate you all for being here. Take it easy. And don't worry, it's all good. It's all gravy, baby. It's going to go places. It's going to go real high. I suspect beyond what we're talking about now, this thing has $20 prices in mind for the end of the cycle, if not near there, right? And here we are sitting at 34 cents now, so it's got a long ways to go. All right, take it easy, y'all. Bye-bye.